All right, so today we're doing a market review from Friday's price action, as well as a brief Q&A. I don't make it too long. I got some things I got to do um, after the stream, but we will do a longer Q&A slash psych stream tomorrow. So if you can't make this one, then we'll have one tomorrow as well. And these will both be recorded and posted on YouTube after. So we're going to go through a couple of things today. I'm going to do the review first and then the Q&A at the end. So we're going to cover the bias and kind of the protocol from Friday's price action going into the news and the kind of specific profile. We're going to talk about an entry model and the one that I took on Friday, as well as kind of classifying drawn liquidities, how to know when drawn liquidity is going to be met, and how do you know, number one, if it's going to go further and when it's going to stop, as well as knowing how drawn liquidities work in relation to flipping bias. Then we're going to talk about obviously any questions within that review and then questions externally. So we'll start with the bias. Going into Friday's price action, talk about it from a weekly perspective down to a daily perspective. So right here, the green line I have delineates the weekly open, and as we go to a higher time frame structure like the daily chart, okay, this is what we want to be focusing on for weekly structure. I mean, you can use it for daily structure as well. I don't personally, but for the weeks, it's great. You can see where liquidity is. You can see what the order flow is showing coming into the week, and it's very, very helpful. So here's the previous weekly close. Just make a vertical line here. Here's that previous weekly close, Friday, August 8th. Clear run on stops, trading back up, holding a bullish order block there, and then prints up aggressively and closes inside of the wick of this candle, almost forming a premature change in state delivery. So bias for the week was bullish, as we saw with the news drivers releasing. And as we go to a 4-hour chart, we'd seen to kind of make the previous weekly high, and on Thursday we're consolidating within a fair value up there as well as one here, and it kind of just wants to be this high resistance move back inside the range where I'm expecting another move higher going into next week. I see this just as a retracement down to the order block and potentially a move back higher using the news early in the week next week. So price action for today, this is important for the bias and kind of the protocol that I'm using. So we see this slight bearish order flow coming back inside of the range, and especially with Friday capping off the week, we're just going to kind of retrace more inside the range. As you know, it's open, low, high, close. So Thursday, Friday, a lot of times is that close coming back into the range. We're not going to be bullish a lot of times unless you see a late week reversal, like a Wednesday or a Thursday. Do you see Friday kind of expand inside of and go for the back towards the highs? This wouldn't be TGIF. That's a good question. It wouldn't be TGIF because a lot of times TGIF is into that 0.2, 0.3, right? If I put on the TGIF range here, it's a lot higher up. And this is where you see like Thursday does make that high of the week and then Friday comes back inside. This is not really a TGIF, nor is it retracement. It's kind of just using back inside the range. Yeah, an ES it may be. Let's see. Yeah, ES a little bit better. But it's just being used as a retracement here. I'm not specifically thinking about TGIFs, but I guess you could classify it as one. Are you requiring more days without news? Only Thursday red folder. Yeah, on you meant for Fridays, no news? Wednesday FOMC meeting. You're talking about next week. Oh, I got you. I mean, yeah, we could see maybe like it's gonna prices action is gonna wait for probably Wednesday FOMC. So by that time onwards, we can figure out if the bias is right. Monday, Tuesday could consolidate. So unless we see Monday be this huge range, then you potentially be looking for Wednesday could be outright reversal back inside. It depends on where we open up. If new week opening gap is up here and we gap up, I'm thinking Monday's gonna run. If it opens up almost inside of the range or even lower, then I'm thinking Monday or Tuesday is gonna consolidate. All right. And then Wednesday's gonna be the reversal back up to the highs if it wants to give us that. That makes sense? I mean, and I could be completely wrong. I'm just gonna let new week opening gap be that thing. I can't predict new week opening gap. We're just gonna use that as a data point to build the bias for next week. But it's setting up nicely for, we got liquidity on both sides, right here and right here. So I think this is a perfect week where we can start to look for some good price action. That's a little bit more predictable. So going back into it, looking kind of that for that bearish order flow to come in and print. I'm gonna clean some of this up here. We got a fair value gap in premium. Price trades into, and the candle body is telling the story there. It wants to respect bearish PD arrays. Drops down again, and then coming to midnight open here, we have the previous daily low being used as the ERL in this case, and we have this being used as the inefficiency for this daily structure moving from internal range down to external range. Okay, so this was something you would put in your screenshot showing the price action of movement. The movement of price action rather is reliable, predictable, and this is exactly why it'd be a day that's a little bit better to find smoother trades instead of it being a ERL back into an IRL. Those days are typically harder. Even you can classify Tuesday technically as that, moving back inside to fill the gap. Those are a little bit higher resistance, so you're going to see more stop runs and things like that. But this is what you would screenshot. I can obviously clean this up a little bit more and just put that. I'll screenshot this and put it in the chat if you want. As we go to the 1 hour chart, this will show us the structure for the daily kind of movement in terms of profiling. So as we look at the minute open, we start to see this run up back inside of a reclaim for value gap. And this exact signature is kind of shows you how August is printing. There will be multiple uses of PD arrays, sometimes that you cannot expect. And it still meets the requirements. Like in this case, why doesn't it just stay below here, use this fair value gap and sell off? That'd be much cleaner. But it has to come up all the way back into premium. And then sell off and still have that same signature, but that signature alone is kind of what shows you it's going to be a little bit harder than normal. But in this case, midnight starts the manipulation. We see this high being formed at 2 and 3 a.m. And then it drops down through a change of state delivery there with a fair value gap. And then it's retracing that going into New York open. So this would be classified as a classic London protraction profile. And as we're trading back into a fair value gap here, you also could see another retracement opportunity going on in here. And we'll label this a 1 hour fair value gap. So coming into 9 o'clock, 9:30, as we go to the 15-minute chart, you see that 8:30 in this case, we want to be seeing it used as either what? Manipulation or expansion. If it's not being used as either one of those clearly, then we just go to the next key time. In this case, 8:30 comes inside the range, fills a fair value gap, but does it leave it with displacement? And now coming into 9:30, am I looking for instantaneous shorts below the range and it's going to quickly do that? No. But it doesn't really matter because we're just letting, at least for me, I'm letting 8:30 print, and then I don't take any trades prior to 9:20. So I want to see the data coming into that just in case this exact scenario happens. Or in this case, 9:15 comes up, takes out that high. We have this one final SMT that forms, and then 9:30 eventually sells off. But in here, this is where I'm building my protocol for the day. That includes what time of entry I'm looking for, how quick I want the run to happen, kind of what time is that end going to be, where is that end going to be, and kind of setting up what model I want to use on the day that's going to be most likely profitable, of course, but the easiest trade, the easiest, smoothest one that I'm highest convicted in to be used as my one entry model for the day. So inside of this, what I'm seeing is, okay, if London is creating the high of the day, and if you've seen my advanced timing guides video talking about when these times of day are being formed in the daily range, it's unlikely that you see, in this case, if the high is being formed up here and all of this is being used as continuous selling, that we see it go for 12 hours, expand the entire range. Right? It's very unlikely that you see 12 hours of the entire day is expanding. So it's going to have these timed intervals of when it starts to when it ends that are reliable and also predictable. And as we go into what I had for my bias on Friday and predictions, I mark out, if I cannot see, especially maybe where it's not going to be. And you see, say, there's low resistance buy side up here, low resistance sell side down here. You let price action kind of tell you how quick it wants to get there. What does it want to do? So in this case, if the high of the day is being formed early in the day, the low of the day is likely to form earlier in the day as well. It's just a statement that you can say. If New York Open creates the reversal, you're going to see the high of the day further in, right? Because it has to expand for a certain amount of time. If we are in close proximity to those potential targets for the day, it's not going to just continue down, especially if it meets the requirements. Draw on liquidity has to meet specific requirements. And this kind of segues into how you know when the low or high has been put in. It has to be a specific time frame PD array at or after X time, and be obviously far enough away from starting from the origin. Right? So in this case, the way we classify if a draw on liquidity is the quote unquote draw on liquidity, or in other words, when it's done expanding and you can no longer find entries, is we have to qualify them. It's not any swing low. It's not just some random 15-minute swing low or 1 hour swing low or 1 hour gap or 15-minute gap. It's going to be very precise. The precision lies in these three bullet points. So if I'm looking for a potential low of the day to form, I want to see it be on a specific time frame PD rate. Well, for the day, that's going to be a 1 hour time frame or higher, but 1 hour is the minimum. And for the session, 15-minute is the time frame requirement. So that means that any targets that we see in the New York session has to be either on a 1 hour time frame or a 15-minute time frame. Meaning we can go into the 15-minute, the 1 hour, and look for specific PD arrays, very specific PD arrays that would meet that requirement. So we go in the 15-minute, we go to the 1 hour, and we look for either time-based liquidity or we look for fair value gaps in premium or discount. In this case, we're shorting from a gap from an IRL. So we would go from IRL to ERL, and we look for time-based ERL targets. So time-based ERL targets would be something like this AM session low from previous day. You also have the previous daily low. It's not marked out by an indicator here, but previous daily low obviously has some liquidity behind it and is time-based. I'm not going to use something like this, right? This would be something else that we're going to talk about. This is just sell side you could look at. Same thing with this. This is like minor sell side. It's an easy partial, but a lot of times does not serve the actual requirements for a specific DOL, meaning the end of the day or the low of the day when it's finished expanding. And this, by the way, this is important. If you don't already know, this is important because then you can know if, say, you missed the first 15 minutes, the first 30 minutes, maybe you miss your first entry or two. When can you reliably take a entry that's 75% of the move in and you still know there's room to run? Instead of, if I take an entry here, it's going to reverse on me and come back inside of the range. This is how you kind of filter and qualify those kind of continuation entries, even if 80% of the move has happened. And you can trust, okay, I'm going to keep going short and it's fine. And there's still room to run. At or specific X time, this is the second qualification. If the high of the day is formed here, you can go back in and watch the advanced time guide videos. If you've not seen those already, I suggest watching that. Go skip this video, go back and watch those, then come back to this. But we know that there's specific draw on time. The low of the day or the high of the day needs to be put in at or after a specific time. We know that majority of the time that's going to be targeting the London close kill zone, meaning the times of 10 o'clock to 12 o'clock. And that's what we can be used as a targeting time. Just like how we have a draw on liquidity in the y-axis, we have to have a draw on liquidity in some sense on the x-axis. So price is looking to pinpoint an area and not just reach a line. It's going to reach a line in x and y. And that would be, okay, now we can stop expanding, go back into consolidation or whatever it is. Also, is it far enough away from the origin? This is just fancy terms for standard deviation projections. Okay, and when we line up all of these, we then can see when that low of the day has been formed or when that draw on liquidity has been met. Boom, now we know we can't really take any more shorts. But if those requirements haven't been met, then we can keep taking shorts, even if it's at 9:45 and there's, but we're still further into the move. You can take that short and have a really, really good trade. Like a 5-hour trade, 80% of the move in. So if you're replaying this, just pause that, take notes if you want to. But this is where I'm going to talk about this sell side here. Okay, I want you to kind of clear everything I talked about and come back to this sell side. This is a sell side that is not time-based liquidity. And sometimes you see it come back and run this out and then come back up and reverse and go back higher. So when we're talking about the exits, the starts also have to be very refined, right? But in this case, if we were to move higher to maybe these time-based liquidity pools up here and say our bias was bullish, we wouldn't need it to come all the way back down to previous daily low, right? We wouldn't need it to come back to the AM session low. Say there's a fair value gap in here, it can retrace back into there, or even take out the minor sell side. And that would be a turtle soup. That is something that you could be using as a condition to flip bias, right? So the condition to flip bias there would be if it does not tag this sell side, run it out, and then move back higher, even this sell side here. If it tags that, runs back higher, okay, you know your bias is bullish. But that's the condition that you would say, okay, if it's closing through that and even taking out the AM session low, I can reliably flip bias and start to go work backwards as well and see if there's SMT and such on the highs and say, okay, now we can flip our bias and go back bearish. And that's a quantifiable reason. It's not just, it's a feeling to flip. It's you have a line in the sand that's saying, when this happens, I know I can reliably flip bias. All right. So I can measure all these out, you know, and make it fancy and put targets and such. Negative 2.5, negative 4. You can refine this down, you know, and then you can put time of day. You've got the 10 o'clock here to 12 o'clock as your targets. And you can start to refine down where this exit's going to be. So as you go into lower time frame, what you see is on a 5-minute time frame, price action comes up, runs out some stops in here, and drops down aggressively. When that's going on the 1-minute chart, you have a fair value gap in here. Whoops. You have a fair value gap in here that price trades back into. And this red line, by the way, is the 15-minute sell side I had marked out. You see right in here. So if it wants to just reject off of this quickly, then we know we could be a bullish bias and instantly take longs if it presented it. In this case, runs at the sell side, consolidates around it, comes back into premium, and then displaces a second time through the sell side. If I don't see an immediate reaction off of this ERL, we can start to look for shorts. And this is where my shorts are going on in here. And reliably know that if there's a fair value gap that's going on here, it's not going to just be used as, oh, it's taking out this sell side and then moving back up higher, right? We can reliably take this short even after it just took out the sell side and trust that it's continued. Same thing with this, right? So while this is going on, we have our last manipulation leg of the session here. Puts you -2, -2.5, and then -4. That's the low of the day. And then in here, this is just the scalp. This is all you need in August. This is what you're trying to shoot for, is on the 15-second chart, at least for me. I'm coming in here on the 15-second chart and just looking for reliable PD arrays that are going to hold after that. So in this case, we have pricing back up, fills in a fair value gap here, drops back down, comes up, fills this gap, and fills the order block right there, comes back down again, retraces back into a 1-minute fair value gap in here with the mitigation block, and then sells off aggressively, sells off aggressively. This is where I'm looking for, once I see the 1-minute PD array, the fair value gap fill, and a 1-minute change to say delivery. This is where I'm trying to hammer in my shorts. So in here, we have the fair value gap being printed. Basically, I'm taking the SysD entry. So as it's crossing through that and validating this as a bearish order block, getting filled in there. When it runs up here, tags the gap and prints back down, getting filled in there. And in here as it takes out that swing low as well. That's the majority of that position being put on. Buying one back as it takes out the AM session low. Then after it tags out the discount PD array or traces back up into premium, fills the mitigation block with the fair value gap as it starts to leave again and closes outside of this gap here. Getting short. Eventually it sells off again into the -2, -2.5, buying some back there, and then buying the bulk of the majority off on the previous daily low. And then it comes back, turns on us at 10 a.m. I'm not interested in the rest of this. You know, for me, that's not the high of the session to the low of the session. It's maybe 50% of the way in, down to near the low of the session, maybe like 40% of that chunk. But the trade then still is, even if I don't get this entry and put it at this high, the trade is still a very decent RR, right? Our entry is, let's say on that swing low, you can put it there, take it down to this swing low, 2.91, or you can put it up to the swing high, where the order block is validated, and that's a 4.84. So even if it's higher into the move, you're still getting a good chunk of the range that's giving you a decent ROI on the actual setup, even if it's a Friday back inside the range. And that's all I would need. And that's all I took for the rest of the day. Right? The frustrating part about this is in here, you have stuff like this. I'm going to talk about this. You have this run on stops, comes back up, fills into the 1 minute fair value gap there, and it drops down. And in here, you have an inversion fair value gap, or technically it's a reclaimed sibi. You have a reclaimed sibi in here that you have an order block, touches into it, drops back down with the fair value gap, retrades into the fair value gap, and uses this as an IFEG. This is where on my live, I went short. And I can show you the execution as well. I went short in here. Placed my stop at the high of the order block, and I got stopped out. And then my rules is I'm only taking one trade on the day. I come to demo here, and I did this. I wasn't streaming on Friday, but I take this off stream, and the demo ends up winning. In my eyes, there's absolutely no reason that it has to come up a second time. Like there's nothing that this retracement did that I don't see that this one did either, right? They both tagged in the fair value gap. I mean, the only thing that really would have saved me is the lack of consistency with displacement here. Like we tag it out and there's no gap, I guess. But in my mind, this is just, number one, this is why you have a stop loss, is I'm not going to be able to win every single trade. But number two, this is some of that August PA showing, where just like how we saw on the higher time frame, in here, we see this gap being used multiple times. Instead of just tagging this, leaving it, filling the gap here and selling off, we see the same exact price action going on the lower time frame, where it's tagging it, almost selling off, and coming back up a second time, almost doing the same exact thing that this did, and then offers the true entry. And this is still inside of the time when I'm looking for 9:30 to still within the opening range. That's just the frustrating part of it. That would have been a nice win to end off the week, but ends up losing. It's half risk, but what can you do? So I'm going to be transparent and say that, sometimes this stuff doesn't work because of the fact that there's some things that I'm not going to be able to see. I'm not the robot. I'm not perfect. I'm going to make a mistake. So the human side of it is I'm only ever going to be 99%. It's exactly why you have to be risk managed, good in your psychology, because you can do almost 99% of the stuff right, read it right, still mess up the execution. And that's the honest reality of it. Now, does that make me red for the week? No, still green for the week. I had taken another loss this week prior to this. So I'd taken 2 losses and 1 win on the week and still profitable on the week. And if you can come to terms with that, psychology becomes a lot easier. You stop controlling things. You stop trying to force things that aren't there. You simply just let the numbers do the work for itself. Okay, if I take my setup reliably, even if I mess up a couple times, the times that it wins will outweigh the times of me losing and making a mistake that I can fix in the future. And normally I can see where I made a mistake. That's the honest truth of reality. You're not going to be perfect. That's the whole point. You're not going to be perfect. You're going to lose trades. There's no shortcut to profitability other than just accepting that fact. As soon as you accept that fact and you can believe that, okay, my system is still going to beat that number. What's the number? 2R 40%. That's the goal, right? You have to be 40% right and have a 2R average. I think that's very doable for everyone. That's not that hard, right? Like when you put, I gotta be less, it doesn't seem like the math would add up, but it does. And most of you average probably 3 or 4R per trade. And you probably average a 60% win rate. But the thing is that we don't see that reality come to fruition yet because we actually haven't been disciplined enough to see it come to reality. And then we freak out because of that. And we try and take things into our own hands and then end up messing the numbers up. But when you have the plan, you stick to it. And then you follow through. It's going to be annoying because sometimes it doesn't work out. It's going to be great because other times it gives you a 13R. And you're like, what the heck was this? But you have the same reaction to it. It's just you're simply following the rules that the piece of paper, and my job theoretically is I come to the day, I sit down and I mentally, I mean, you could probably do this physically too. You just read through a checklist. Like that's as simple as it is. Obviously my checklist and your checklist is probably hundreds of things that you think subconsciously just about reading specific candles. So you can't really checklist it like that. But in theory, your job is just to operate. You know your stuff. It's like riding a bike in a sense, but you have to just, without hesitation, know how to operate. It's not the fact that you fear. It's kind of like I gave this analogy to someone on a one-on-one call earlier today, but it's like when you first learn how to drive, it's not the fact that you fear a lot of times the other stuff that's going on around you. It's the fact that if something were to go wrong, you don't know if you would be able to act in a manner that would save you. Or you don't trust in the system, in this case, it's your skill, to save you in that situation to avoid the crash or stop when it's needed or whatever it may be. So in trading, it's the same thing. That fear will materialize in other ways and distract you sometimes by over leveraging and over trading and, oh, it's because I don't know enough or, oh, it's because of this or whatever. When in reality, it's just once you have the system, you have to just follow through without any hesitation or rethinking. Enough times where it becomes a habit. Once it becomes a habit, you don't think about it anymore. And then your fear at that point kind of extinguishes itself. So you have to have courage for about 20 to 30 days. If you can have courage to believe in that system, that's all it takes. And then once you see the results of that and you reap the benefits of it, you never turn back because you're like, why would I ever do that again? It just makes no sense because I'm finally getting the result that I wanted. And then instantaneously at that point, to me, it's like, it's just a light switch. You just flick it at that point and it's never going to come back the other way. So you have to believe that you can trust in your ability to do that for a certain amount of time. It becomes habit and you never have to put in effort consciously to not overtrade when you take a loss, or when you finally see green in your P&L, you get greedy and overtrade. Whatever it may be, whatever that psychological thing is, that it'll never happen again and not require conscious effort to manage that, and that's what we all want as this freeing thing of not worry about, are we going to be able to manage yourselves? As just, that's a truth. It's a fact of the matter. And now you can put your efforts and mental capital towards something else because you, in a sense, beat trading. All right. So my app session is over. I got market review, bias review, execution review, psychology, and at the end. Let's see if I missed any questions. Anyway, I'm predicting delay protraction profiles. I got wrecked a few times over the last 3 weeks. Thinking daily profile was open, low, high, close. Then we came down and made new low day before going up. It's, at least for me, this has helped, is that profiling is secondary or tertiary to getting a bias. Like I've found that in any way using profiling to determine a bias, a lot of times kind of messes me up. It's like a secondary or third thing where I already have a bias in mind. And now I fit that bias with the profile instead of the other way around where I'm trying to take a profile and fit it with the bias or use it for the bias. So every single day after the fact, you look at every day and you're like, oh, that profile makes sense. It's only one of the three, right? The big three would be swing to Z, classic London protraction, New York open reversal. Those three can fit 99% of all profiles for the day. So what we're looking at, it's either going to be London makes the high or New York makes the high, or it's a consolidation day. That's it. So in this case, London makes the high, London close makes the low. You're more reading the profile than kind of predicting it. So if you see in this case, say the low right here at 9:30 tags out this swing low, like I said, and run out this sell side, and then trade it up and create a change in state delivery on the 15-minute chart. Okay, well at that point, my profile is probably going to be a New York open reversal. That's the low of the day. I know that the high is still going to be made between 10 to 12, probably further into 10 o'clock and further to 12 than 10. And now you know the profile and now you know how to treat it, what kind of entry, what kind of time you're looking for, things like that. So I'm not in any way really predicting the profile. I'm just reading the profile from what the bias is telling me, and me sticking to that kind of unlocks the profile. So that's why it's like secondary or tertiary to the bias itself. But that also means that if you don't see something that's in sequence with that specific profile, you can go back and kind of rework out what's going on and then say, oh, it's actually this. Now I can see what's going on. Now I can use this entry that's relative to that specific market profile for the day. Same thing with like a session thing, right? Like if 9:30 or 8:30 makes the high, this case, right? When I come to the morning, I could have said that 8:30 was going to make the high, but coming into the session, the specific profile is 9:30 is going to make it. And we just react to that compared to just predicting it. The more I try and predict 8:30 being the high, is more I get wrecked. It's much easier to just wait for 9:30 and filter that out. Got the executions out of the way. Biggest issue, right on analysis most of the time with bad entries. Yeah. Then it's actually creating an entry model that you trust to be there all the time. That whenever you have a bias, you know that entry is going to be there, and at that specific time. So that's why I have multiple different entries. I'll use retracement, unicorn setup. I'll use these 15-second SysD entries, things that I know how to engage with price action on any given profile once I figure out what's actually going on. And if you have that freedom, then it kind of frees up this idea that, oh, you're going to miss an entry, or when you take the entry, it's too late and you already missed a move. And now your stop loss is too low. Then you get stopped out prematurely. Then it goes to take profit. All that stuff, all is avoided by just the confidence and conviction you have in your way of getting it. As long as you know it's going to be there, as long as you know it's reliable, most of the time, there's your entry model. Why sometimes TGIF idea didn't work out? Because we're reversing later into the week. So if you say this is Wednesday at the low, a lot of times you see Friday continue maybe into the PM session, and then PM session has TGIF. But Friday is its own day. So every Friday is not TGIF. You just look at what needs to be done. If our expansion needs to be done, we haven't hit that target yet, then we're going to see expansion. If the weekly target's already been met and we're now back inside the range, Friday's going to consolidate. In this case, it's returning back into the range, right to 50%, where it's going to consolidate. Hopefully that makes sense. I got you, JKX. I'll check it right after. Do you include weekly profile to your analysis? Of course. Less so in these harder months and weeks. When it's obvious to me, I will use it, but I'm not too concerned with getting the profile right or wrong and actually reliably using that profile, because it's, at least in this time of the year, it's much harder to say, oh, tomorrow I can predict the entire next day with confidence and actually put limit orders overnight or swing positions and things like that. It's a little bit more random and I can't trust it as much. So I'll use it as a template, but I'm not using it as much as I do in the spring and the fall. So when we get to September PA, maybe mid-September, then I'll start using weekly profiles to hopefully build in like a whole daily swing, like you've seen me take before. Exactly. Logic ahead of pattern. Correct. Fits in with the dailies, fits in with the weekly, fits in with, I don't really use session profile, but. So I think, let's go through one more entry for this model. So in this case, I'm taking the SysD entry over here on a 15-second chart. You can do the same thing right after, I'm taking this, change this day delivery, and this one as well. In this case, you have a retracement back up into the inversion fair value gap, inside of the 1 minute fair value gap, inside the 1 minute order block as well. And then you could take this SysD. So it's there all the time. This is a very good model. You don't have to use the 15-second, you use the 1 minute. 1 minute is fine as well. It's this continued sell program entry model. You can see it on the buy program as well. And I'm going to drop a video on this soon. But yeah, I think let's see, bias protocol, news, DOT entry model, and further example of model, DOL. Yeah. Yeah, September is like right in between. I mean, it starts the fall months. It's not as bad as August, that's for sure, but maybe not perfect. I've seen October to be a bit better. October and like April are like those perfect months, I feel like. April, May. Any more questions I missed or you have regarding psychology or entry models or bias, whatever it may be? I like June more. Yeah. July sometimes is a little weird. You have it, this consolidation sometimes during the summer. January, yeah, January is not bad. December, I think, was my best in the recent times in terms of execution. Yeah, what's up? Psychology question? Let me clean this chart up. Go back over here. I will answer this one and then we'll wrap it up. And then tomorrow we'll do a more Q&A based stuff. If you got any more questions or psychology stuff, then we'll go through that. It'll be sometime after. We could either do it in the morning or we could do it in the later afternoon, like after 1 p.m., 1 or 2 p.m. Either sometime in the morning at like 10:30, 11 o'clock, or sometime after 2 p.m. EST. Will do, will do. Fight with entries because most time I have a correct bias, but when I miss first execution, I don't want to enter more because I feel mad about myself. You have the same problem. I think that's pretty common for a lot of people to go through. It'll be public tomorrow. So I think ICT is the analogy of bus stops. You know, you may look at it and say, okay, if I had gotten in there, it's going to give you a much better trade ratio, but it does come with like bus stops. So if you know how to get in, there's going to be another entry. Might as well take that one. You don't have to be perfect, right? You're gonna miss. I'm gonna miss entries, but at least get on board at some point. So then you're participating in that, as long as it's within your model, of course. But you don't gotta feel mad or beat yourself up about it. It could be rooted from idea of perfection. You gotta be perfect in executing and things like that. It's not true. Idea is not to be perfect or right or wrong or bottom tick or top tick. It's simply just to get in here, make your money, and leave. Simple as that. So no flashiness, no whatever. Just get in here, do your job, and get out. So just confront it and see why do you feel like you're mad about it? Why do you feel like then you can't feel that take that entry because you're managing your psychology in some sense, and see if that stems from something that's either you don't trust the entry and you feel like that's going to just be the one entry, or is it maybe idea of perfection? It could be multiple different things. Once you figure that out, apply the logic to it as to maybe why that's correct and incorrect. And a lot of times you can free yourself from that and take the second execution if it's there and feel confident about that as well. Yeah, I'm going to go through DMs after this. I'll go through all of them. Yeah. So, I mean, I'm not going to say it's impossible. It's possible to do that 100%. Catch top and bottom of the session. It's not possible. Okay, it's possible, but it's not practical to do that every day. So I know I'm able to do that when it presents itself. I can take 90% of that session range. Other times, I'm just not going to be able to do that confidently. So I may only take some of it. Like you saw on Friday, I'm only taking just a chunk of that range. I didn't get the low of the day. I didn't get the high of the day. Still works out. So sometimes you see that in community. It's a negative thing about community is you see a lot of good traders who are on level 500 and you may be on level 25 and compare and think that's what's required to be profitable. 2R 40% is all you need. That's what you're shooting for. 2R 40%, 5R 50%, produce the same results. You're still profitable. At that point, it's just about scaling and it's about that exponential increase of your equity. Cut the losers when there's, cut the losers short, let winners ride. Increase your position size as you start to win, decrease your position size as you start to lose. And that is how you, as long as you manage your risk, boom. Simple as that. And it just scales. And eventually your risk that you had 2 weeks ago is now tripled 2 weeks later. And now your risk is, instead of averaging 400 or 500, whatever, it's 1.5. And you scale. Of course, yeah, I still use the ATM model. I probably use it on a lower time frame now. Like 1 minute, 15 second, if it's there. I'll use it mostly on the 1 minute chart, like it's true to. It's very reliable, so it'll always be there. I'm trying to work more on my lower time frame executions, so I can stack them together and take like an ATM model framework with a 15-second entry. That's most times what I'm trying to do. So yeah, all the framework that I'm building is basically still ATM. It's a very good model. Anyways, so we'll wrap it up here. I'm gonna post this recording up later today. It's about 41 minutes long. A bunch of content in here, so for the new and the old. So go through it if you missed out the beginning of this video. Talk about bias, talk about entries, talk about different intricate things. So it's a good watch, but it'll be unlisted, posted up as usual in the YouTube vids. And if you have any questions on it, shoot me a DM. I'll get back to you as soon as possible. All right, so do the things that are necessary to succeed. Your future self is relying on you and counting on you. So get there as quick and easy as possible. All right. And take care the rest of the day. I'll talk to you guys soon. Peace.